Akshay Bhagwat to get his views on the markets because they are choppy and there is quite a bit of uncertainty. Akshay, thank you for joining us here on News 9. Always a pleasure speaking with you. What's your sense of the market? Because incrementally we are moving higher. Nifty is at record levels, but I was noticing a couple of interesting things. More stocks are now in the lower circuit, historically speaking, and the advanced decline ratio, that's also heavily favoring the bears at this point. What does this tell us about the overall sentiment of the market?
Good morning, Suyash. Well, see, if you look at the broader sentiment of the market, you're absolutely right. Last 7, 8 days, Nifty has been consolidating or oscillating around the 22,300 range. But if you look at the broader markets, yesterday, the small caps, the mid cap space, there was good selling actually seen in all these counters. And this was on the backdrop of even SEBI raising red flags about the mid cap and the small cap space. So there is some bit of pressure in the market. Yes, I completely agree with you. But if you were to see Nifty index as such, the issue is that some or the other stock from the Nifty index is saving the day for the Nifty. So today it is ITC. If you see yesterday, Infosys and HDFC Bank. So Nifty continues to trade in a range, but stock wise there is some pressure which I see. Levels for Nifty to keep a watch on. Key crucial support would be 22,200 and the resistance would be 22,500. Still, as far as the broader trend goes for the Nifty index, yes, the trend has not changed. It is still positive. If 22,200 breaks, then that would be the first sign of caution for the index. Otherwise, till now, I don't see any reason to worry. But yes, if you have exposure to the small and the mid cap space, you need to be a bit worried. You need to have your stop losses in place or your risk management trades in place, because there is where the pain will be felt, even going ahead, as I understand, going by the broader setup.
All right, nothing too concerning for the headliners, but the broader markets, be cautious there. Be aware of where your stop losses are, and make sure your investments are well insulated. But I also wanted to get your view on Nifty Bank, because that has been rather more volatile of the two. It moved in that range of about 900 points yesterday, formed that big spinning top sort of a candlestick pattern. I mean, it seemed like it was HDFC Bank versus everybody else. HDFC Bank had a very good session. Everything else, especially the PSU names, they were falling.
Absolutely. Bank Nifty, a spinning top, clearly an indecisive candle and a high volatility in terms of price action was how the day summed up yesterday. Today being the weekly expiry for the bank index, 47,000 here would hold special relevance if you are a day trader. Now, if you look at the derivative placement in the option segment, especially since it's a weekly expiry day, a lot of put writing bets are concentrated at the 47,000 strike. So if you're looking out for support for day trading, yes, 47,000 is an important number you have to note. On the upside, a lot of call writing. If you look at the broader option matrix, there is a significant presence in calls, and majority of them are on the writing side. That is evident by the OIPCR readings, which is almost around 0.7. So call writers are kind of slowly piling up at strikes of 47,500, 47,800, and the majority is at 48,000. So yes, Bank Nifty will have a slight pressure in case it tries to make an up move, but the broader setup is still 47,000 holds. Still, there is a chance that some or the other bank will save the day, like it happened for HDFC Bank yesterday. So yes, hold your longs in Bank Nifty, keep strict stop losses below 47,000. Today's weekly expiry, chances are that it might be choppy, but 47,000 would hold for the day.
All right, and speaking of savior for Nifty Bank, I mean, clearly it looks like it's HDFC Bank, at least in the last few sessions. Yesterday, the stock was up over 2%, this morning up 0.5%. And as I also mentioned, it was the only driver, and to some extent ICICI Bank as well, that was, keeping Nifty Bank afloat. But we are expecting this this FTSE rejig that will bring huge inflows for the stock. That's on March 15th. What's your assessment of HDFC Bank? I mean, are there any signs that suggest that perhaps you have seen or at least the worst is behind us for now?
Well, honestly, one thing is evident on the charts is that 1400 is emerging to be a support or a demand area for HDFC Bank. Now, it's been almost, you can say, over a month where momentum has not regained, but 1400 has been held on. for the momentum to pick up, or if we were to talk about any trend reversals for HDFC Bank, it is mighty important that HDFC Bank crosses above 1480. So this level you should have on your mind. Till then, it's still in a range. It's nearing the upper end of the range. So it's again a word of caution as it nears the upper end of the range. The trend reversal or the momentum regain or a positive positional outlook will be seen in HDFC Bank only if we overcome and sustain above 1480. As it stands right now, it's in a range 1400, 1480, nearing the upper end of the range. So a word of caution if you are building a trading long position at 1480. So still, as I see the broader charts, it is still in a range. There is no reason for me to believe still that there is going to be a major upside in HDFC Bank. It is just holding the day and acting as a savior for the indices. That's what the chart reading has to say.
Good morning, Akshay. Now, the tire industry has not been doing too well of late. And yesterday, Balakrishna Industries, there was an income tax raid on their premises. Now, despite that, when I looked at the stocks and the performances in the last 1 week, Balakrishna Industries is the only stock that is in the positive, slightly down today. What explains that according to you? And is it a time to get into the tire industry stocks specifically right now, considering that they are hitting such lows at the moment?
Good morning, Amit. For Balkrishna Industries, yes, the stock is in a slight negative zone for day trading, but yesterday it did note a strong upside move on day trading front. It was primarily on some short unwinding as I look at the derivatives, futures and options space. But the broader chart setup still is not exciting. There is no reason on the charts which signals that there can be some major upside ticking into this particular stock. So I just think this is more of a dead cat bounce in the normal proceedings of the market. At the best, you can see levels of 2400, but clearly I do not see any trade building up in this the way the charts are. 2250, 2400 is the range. We are somewhere in the midway of this range, and clearly it's in a no trading zone. If you're holding this share, still the broader charts too are suggestive of a range bound action in Balkrishna Industries. So really, if you're an investor, your stop losses should be below 2200, but I don't see any major momentum pickup or some action brewing in this stock as far as the short to medium term is concerned. As far as Apollo Tyres, since we're talking about the tire industries, a similar chart structure currently trading at a vital pivotal point to 500 is an important support zone. If this breaks, so you might see some bit of sell-off in this stock. So really in the tire space, still I'm not very keen on going aggressively long. Most of the components in the tire industries are either range bound or have a slightly negative texture, the way the chart placement suggests.
Yeah, Apollo not too far from its 52-week high also. But what are your picks for our investors today, Akshay?
Yes. So I have a couple of trading picks. It's a very choppy market, and you need to be very flexible understanding the way the market is behaving right now. The couple of stocks which I like here, one is Kotak Bank from the private banking space. 1680, 1700 time and again is acting as a good support for this bank. And out of the entire private banking space, this is one name which has not performed as yet in the last couple of years in terms of its price move. So I think this is a good trade from a risk reward payoff. Buy at the current rates. You will see targets of around 1767 to 1781. That's from a short-term trading perspective. Keep a stop of 1697 on this buy trade. And the second trade here is from the IT space, since IT is in the limelight, although a bit choppy, but the demand is slowly building up at a base. So Wipro is one stock which I like from the IT space. Near its support, so a good risk reward payoff, and any recovery can see targets of 527 to around 534 in Wipro from the short term perspective. Stop loss will be 497 on this buy trade.
All right, Wipro and Kotak Mahindra Bank, those can be on your radar for the short term. Akshay, always a pleasure speaking with you. Thank you for joining us here on News 9.